Hey, everybody, Economic Ninja here. We're going to talk about stock market, but we're also really talking about real estate. In particular, we're going to be talking about Lowe's, Home Depot, and other home do-it-centers that are publicly traded. This is specifically about Lowe's stock. So if you have this stock, you may want to realize what's going on here. It's entitled "The Housing Market is Cracking, and That Will Hammer Lowe's," analyst warns. There have been some downgrades in Lowe's, and we're going to talk about that. And if you guys own the stock, I'd be aware that we're at the top of the market when it comes to these home do-it-center stocks like Lowe's and Home Depot, because the narrative is out there. The housing market is coming down. We are not only going to cool, you're going to see it accelerate in the next 6 months. But that means losses in stocks. Guys, if you are a stock trader and you want to learn more about stocks, I've got a link to an awesome course on technical analysis and learning market cycles and stock cycles and how you should be teaching yourself how to trade these and get in when the time's good, but get out before everything's crashing down. And that's what I'm concerned with. Now, ironically, as you can see right here, Lowe's stock is up a little over 1% or 1.5% right now, but this is what's going on. And I'm going to link the story below. Lowe's stock is getting nailed with a downgrade by analysts at CITI on fears that a rapid cooling in the housing market will hammer demand at the home improvement retailer. CITI analyst Steven Zaccone slashed his ratings on Lowe's to neutral from buy on Thursday. Little side note, guys, we always see home do-it-centers thrive in the middle of a housing rise and then at the end, right before the bottom drops out and you see it in the news, which we are at right now. And the reason why is because as homes increase in value and interest rates go up, people find that they cannot buy the house next door so that they can, be better than the Joneses. So what do? They fix up what they've already got. And so they run to their local home do-it-center and they fix it up to make themselves feel good, which again, just exacerbates the problem because they're just blowing money they probably don't have in the first place on remodels that they shouldn't be doing right now as they're going into a housing shortage. Okay. And we're seeing that right now, but the problem is it's now already in the narrative all over the country that housing's cooling. And I believe you're going to see an actual housing market collapse, which will be really exciting in the next 6 months. All right. It says right here, we see risk of a second quarter miss on the same store sales as earnings per share versus street, with the potential to cut forward 2022 guidance. Fiscal year 2022 guidance, given the weak first half results. Zaccone wrote in a new note to clients, "We believe that the buy side is bracing for a miss and guide down, but we see less likelihood of a relief rally on cut guidance given the negative overhang of a slowing housing market." And that is absolutely correct. The negative overhang of a slowing housing market is because you can't go anywhere, read the news without seeing something about the slowing housing market. And because the housing market was so hot the last couple of years, it's going to make these stories even that much more interesting to read for the general public going into this housing market crash. All right. Now, Zaccone maintained a buy rating on Lowe's rival Home Depot, however, on the view that sales to contractors, known as pros and Home Depot, will remain strong in the near term. Lowe's has far less of a presence in the contractor business compared to Home Depot. I can actually test to that. My construction company mainly buys from Home Depot. We only buy from Lowe's when Lowe's is closer on our equipment or tool, material run. But I will tell you this right now, Home Depot, and you just saw that video about me walking past Home Depot, they are starting to get stacked up with inventory, and contractors are running for the hills right now because they are having a hard time. And I'll give you an example. My buddy just had a roof put on, and where he was 6 months out, it was always 6 months out. And then he just got a phone call by 2 roofing contractors literally 2 weeks ago and said, we could be there in 2 weeks. And within 2 weeks, not only did they show up, they finished the roof. It's done. And the reason why is because he asked them, why all of a sudden do you have all this time? And said a bunch of our jobs were canceled. And that is true. People are walking away from new construction jobs because they cannot hold on to their locked in lower rate, and they cannot afford the construction build at a higher rate. So we are going to see story after story in the next 8 weeks of home builders that are going to be hurting, and that will eventually bring down Home Depots. Again, if you're playing these stocks, be careful, learn about them. If you don't have technical analysis training, go and get it. If not from the course that I have from Johnny, then go find it somewhere else because it's very, very important. All right, guys, I'm going to stop the sharing right now. We're going to link this story below. Be careful because you're about to see some interesting things. And honestly, there's a lot of these stocks that are sitting in pension funds right now. probably in one of our pension funds. All right, guys, that being said, the Economic Ninja is out.